To put things elegantly, stocks and especially cryptos took an absolute hot dump on all of our chests this week. Now, if you're a seasoned investor in crypto, you're probably thinking, yeah, and I've been dookied on before and it always works itself out. But if you're new to cryptos or stocks, which I know many people are, there's many people who just invested for the first time ever this year, you're probably rightfully scared right now. Maybe you're seeing losses of 10 to 30% in a short period of time. And you're thinking, I don't know if this investing thing's for me. Maybe the party's over. There's no money to be made at this point. So I wanted to put out a video talking about why this is happening, because I think it's really important to understand why things happen, because it makes you feel more comfortable knowing kind of how the wheels are turning, what we can expect in the future, and what I'm doing. Hint, I'm buying. And I'm going to buy a few certain coins at the end of this video. We're just going to do it live. You have to practice what you preach after all. So as far as I can tell, the recent corrections are due to at least 3 major reasons, and I wanted to cover those. The first one being, early in the week, there was a rumor from a single Twitter account that the US Treasury was set to charge several financial institutions for money laundering using cryptocurrencies. Now, this is scary, but this was unsubstantiated, and it was literally just a tweet from one account, and this caused a flash crash and the loss of billions of dollars in market cap for various coins like Bitcoin and tons of other altcoins, all because of one tweet that was unsubstantiated. And this has kind of left cryptos on shaky footing for the rest of the week. And this kind of brings me to the second reason. The shaky footing has made investors realize that if one unsubstantiated tweet could cause things to tumble this much, what might happen if there's a real issue? Like if something actually happens, if one tweet can cause a tumble of 10, 15%, if a real issue happens, what are we going to look at? Is it going to be 40, 50%? So people are concerned, like, what if something big actually happens? And then the third reason, which I think is the biggest reason, Biden proposed his new capital gains tax plan. And this was kind of the nail in the coffin for this poor performing week. It was the knockout punch for this week. So let's cover the details on this. And I want to cover it in depth because I think it is really interesting and important to understand. So Biden has a bill coming out very soon called the American Families Plan, and they're eyeing down ways to pay for this darn thing. And one of the ways that they're proposing is by nearly doubling the capital gains tax for the most rich Americans. Now, capital gains tax is the tax on the difference between what you paid for an asset and what you sold it for. So, for example, let's say you bought a crypto for $10,000 and then you sold it for $20,000. First off, congratulations, nice trade. Second off, you owe Uncle Sam tax on that $10,000 in profit, and there's no ifs, ands, or buts about it. There's no way around it. But the amount of tax you pay gets pretty complicated because that tax rate depends on things like your income and how long you held the asset for. Some people pay no capital gains tax rate. So digging into this a little bit further, if you hold an asset for less than a year and you sold it, you're subject to capital gains taxes at whatever your marginal ordinary income tax rate is. Now, what the heck does that jumble of words even mean? So let's do some examples. If you made $40,000 in income, your top marginal tax rate is 22%. And because you're at 22% for your top marginal tax rate, that would also be your tax rate on your short-term capital gains. Or if you made $30,000 in income, your top marginal tax rate is 12%. So that would also be the tax rate on your short-term capital gains for trades that lasted less than 1 year. Now, if you hold on to an asset for longer than a year, there are huge tax incentives, and for good reason, because this helps out the economy. It smooths out markets and makes things less volatile if people leave their money in longer. And it helps push investment and progress forward because there was funding and money pushing projects forward. It's simple enough. And because of that, the long-term capital gains tax rate is much lower than the marginal tax rate for rich individuals. Now, that's why there's famous quotes from people like Warren Buffett who says, hey, I pay less tax than my secretary. Now, he doesn't actually pay fewer dollars than his secretary in tax, but his tax rate is lower because the long-term capital gains rate is lower than his secretary's marginal tax rate. That's how it works. It's kind of, a play on words a little bit. Now, here we can see what the long-term capital gains tax rate is. If you make less than $40,000 as an individual, your long-term capital gains rate is 0%. Between $40,001 to $441,000, you only pay 15%, and then above $441,451, that's when you finally hit that 20% mark. Plus, you also need to add an additional 3.8% if you're a high income earner, over $200,000 for single filers or $250,000 for joint filers. Now, if you've made some good trades in the last year and you want to figure out exactly how much you can expect to pay in capital gains tax, NerdWallet has this really awesome calculator that I'll have linked down in the description that's super helpful. Also, if you want to go ahead and get a couple free stocks, check out Webull, which is also down there in the description. You get 2 free stocks when you deposit $100, plus they'll send me a free stock as a thanks for sending you, so you'll be helping out this channel as well. So right now, the maximum amount you can pay in long-term capital gains is 23.8% if you are a very high income earner. So now that we know the context, what exactly did Biden propose to do? Now, he wants to nearly double this capital gains tax rate to 39.6% for those who earn more than $1 million a year in taxable income. And then we add in that additional 3.8% because that 3.8% isn't going anywhere. We're looking at a total potential tax of 43.4% for the highest income earners on their capital gains. Now, this also isn't including how your state may tax capital gains, and that's when you can get numbers in the 50+% range, depending on where you live. Now, as far as I can tell, this would place the US with the highest capital gains tax rate, just beating out Denmark by over 1%. And of course, it's going to have far-reaching effects like money flowing out of stocks and into things like real estate, and companies opting to compensate more in cash than they do in stocks because of the tax implications on earned income and investment income. But this has created a ton of concern for the crypto community, who's looking at some huge profits and ultimately huge tax bills because of those profits as soon as they sell. I mean, if you bought Bitcoin a year ago, you're sitting up at least 650% right now, and a tax rate of up to 43.4%. Doesn't sound so fun. So as a result to this proposal, many people sold, which ironically triggers capital gains tax. So you're getting what you're trying to avoid. You don't pay tax unless you sell, people. Now, will this tax actually go through? That's the real question we need to ask, and probably not where it sits. Now, I've spent a lot of time understanding how legislation works, and generally how it works is when one side makes a bold proposal, they set the bar higher than they actually expect things to happen. So if they wanted the tax rate to go from 20% to, let's say, 28% or 30%, they're going to propose 40, 45%. That way, the middle ground is where they actually want things to be. It's the same thing if you're going to go buy a used car and the car is listed for $6,000 and you offer $4,000, knowing that you're perfectly able to pay $5,000, you're willing to pay $5,000. It's classic negotiations. And then on top of this, Biden has actually said that he's willing to compromise, which is probably the worst thing you can do in a negotiation, is by saying 43% taxes, OBO, or best offer. So, like I said, this probably won't go through exactly where it sits. It'll be very hard to get as much Democratic support as they absolutely need, but it is at least affecting the crypto markets in the short term. Now the question is, should you be concerned about these downturns? And the answer is probably not, as long as you can check a few boxes. First, you shouldn't be overly concerned if you're in these investments for the long haul. We've basically all come to the consensus that as time goes past, cryptos will become more and more popular and useful. However, in the short term, it's going to be extremely volatile. And if anything, it's getting less and less volatile as time goes past. I mean, there's been times in the past where Bitcoin has dropped more than 90%, and now we're freaking out about a 10% drop. So if that's not progress, I don't know what is. Now, if we take a look at their prices, this might make you feel a little bit better about what's going on. We have just the last year for Bitcoin. We can see with every huge peak, there is a valley. Every huge peak, there is a valley, and it always corrects. And it seems like we're pretty much hitting the bottom of where you would expect this valley to hit. And if we zoom out even further to the all-time chart, we can see every major increase was followed by correction, which was ultimately resolved. Now, should we be concerned about this absolute wall that has been built in the recent few months? Absolutely, yes, if you are a short-term investor. If you're long-term, you should be able to make it through this and buy the dip, if nothing else. And Bitcoin isn't the only one that looks like this. Here's the one-year chart for Ethereum. Every peak followed by a valley. Every peak followed by a valley, up and up and up, trending upwards over time. And of course, we've seen quite the wall in the recent past, and we've seen peaks in the past that always are ultimately fixed. Same with Cardano. This one isn't quite as old, but we can see there was a wall built up, peak valley, peak valley. This one's a little bit more inherently volatile because it's a smaller coin, and the smaller the coin, the less it takes to shift 10, 20, 30%. But the point here, and of course this isn't financial advice, is that if you're going long-term, you really shouldn't be worried about the day-to-day. If you're truly in this for the long run, you really don't even need to look at what the crypto price is on a day-to-day basis, because it doesn't really matter until 10 years from now, 15 years from now. But this is all coupled with another box that you need to check in order to be able to sleep at night, and that's having stable investments as the root of your portfolio. Now, if you're going all in, YOLOing on crypto, you have to be prepared for volatility. But if you want to hedge some of that volatility, have safe investments. Throw 50, 60% of your investment money into a safe index fund or a long-term stable stock that is producing dividends if you're worried about short-term volatility. For myself, the majority of my money goes into boring investments that I've done value assessments on, and I expect to go up, a reliable 8 to 15% a year. And then I have some YOLO money on the side that I use for more speculative things or things that don't produce cash. And this isn't to say that I think cryptos aren't going to just get bigger and bigger and bigger in the future, but I want a stable base. I don't want to lose money. So I have a stable base of stable investments, and then I have a chunk of investments that are much more volatile, but I don't really care what happens on the short term with those volatile investments because they're still long-term, more long shot investments. Really what comes down to making yourself concerned in one of these investments is you overextended yourself or you were just a little bit too greedy. Now, this may not be what you want to hear, but it's probably what you need to hear. If you're sitting in a position where you're like, I just started investing in January, February, why am I not seeing these 300% gains? Why am I down now 20%? It probably comes down to greediness. You're fully aware that there are investments out there that offer 5 to 10 to 15% returns, but you want the 300% investments. So you have to be okay with the volatility of a 300% investment and what goes along with that. You really can't have both worlds here as far as investing goes. And we're in a situation where there's a lot of FOMO as well, where you see others making all this money and then you want to hop on the train. And a lot of the time when most people are aware of an investment, it's too late and you should probably hold off and just let things cool off a little bit. But if you are still thinking, okay, cryptos are the future, I'm okay with short-term volatility, what you need to do on a price change like this, on a big dip, is of course buy the dip. And I do think that this is a fundamental change than what we've seen in the past, because in the past there are dips and we see more and more people just running for the hills like, I'm done with crypto. But this time around, I've noticed many more people who are excited about the dip and wanting to buy the dip. And I think this is going to help stabilize the price. And of course, we have more institutional buyers of Bitcoin than ever before, and they are much more resilient and resistant to sudden price changes. And they're not going to move millions of dollars or tens of millions of dollars as quickly as someone might move a couple $1,000s who has no other investment. So I think this is going to help out the prices of things like Bitcoin and other altcoins that may have more institutional investors. Now, because of this, because I am long these coins and because the short-term volatility doesn't bother me that much and I have a stable base of stable investments, I'm going to buy the dip. And like I said, I'm going to do this live on this video. So I'm gonna pull up my phone here. This is the app that I've been using a lot. It's called KuCoin. I've basically been using it for all of my crypto trading. It's more of an advanced app, but it has tons of features like lending and staking and other ways to make money. So this is where I've been doing most of my buying. I'll have it linked down in the description. You'll save some money on trading fees if you end up using that link. So first I'm going to buy some Bitcoin because there's a dip here. We're at just over $50,000 right now. I'm just going to buy $2,000 worth of Bitcoin, and I'm doing a market order just so this goes through much more quickly. Don't hate me for it. And I just do buy Bitcoin. And there we go. And then while I'm at it, I'm also going to buy some ADA because it is on sale right now and I am long ADA. I'm also going to do a market order here. I'm just going to do the rest that's in my trading account to keep things simple. Buy ADA and we are good to go. So we bought the dip, I added to my current positions because I am long these positions and because I think it's important to practice what you preach. And when I say I'm gonna buy dips, I actually buy dips. And it's important to note that I make a lot of trades that I don't make YouTube videos about. And if you wanna be alerted of the trades that I make, all you have to do is join the YouTube channel as a level 2 member, and then you'll get full Discord access, and that will give you buy alerts. Whenever I buy anything, I throw an alert up on Discord, and you'll know exactly when I buy. So in summary, there are several reasons why cryptocurrencies have gone down in the past week, but they aren't fundamental problems with cryptocurrencies. And because of that, I am choosing to personally buy the dip. Now, of course, always do your own due diligence. This isn't financial advice, but now that you understand what's going on, this might make you feel a little bit more safe about this. But of course, always root investments in stable things if you want stable returns. If you want crazy returns, be okay with the volatility. So that's going to do it for today. I would like to thank you for watching, and I hope you have a profitable day.